Good afternoon, everyone. Thank you for joining us for this webinar. We are happy to partner with Alpha Accurate Advisors to offer Equity Basket on our platform. Today, we have Mr. Rajesh Kothari, who's the founder and the driving force in making Alpha Accurate one of the top PMS managers in India. Alpha Accurate has received various awards for the best PMS in India from APAC Insiders 2001 and PMS AIF World. Their flagship fund, which is the AAA IOP PMS, has delivered 18.8% CAGR return vis-a-vis a benchmark of 12% CAGR return over the period of last 12 and a half years. Mr. Rajesh comes with 27 years of experience in capital market and fund management, with expertise in managing both long-only and long-short investment strategies. Prior to setting up of Alpha Accurate, he was a successful fund manager at DSP Mutual Fund, managing DSP Equity, DSP Top 100, DSP Balance, and DSP Technology Fund. For people who have been in this industry for last 15 to 20 years, would be aware that those were the golden years for DSP Mutual Fund. And Rajesh was awarded as a Platinum Fund Manager for managing DSP equity funds by Economic Times for his superior risk-adjusted returns. He is also a frequent speaker at various media houses like Bloomberg, CNBC TV, Times Now, and so on. So we are grateful to have him on board. And without taking any further ado, over to you, Rajesh.
Thank you, Kumar. Good evening, friends, and thank you, Fintso, for providing us an opportunity to present, on this today's evening. Friends, with this democratization of investments and democratization of savings, we thought it is prudent to launch for our RIA platform, the Fintso Next Generation Opportunities, small case for our investors. Friends, I'm sure all of you would agree that during last 2 years, particularly post-COVID era, the way in which we consume something, the way in which we entertain ourselves, the way in which we teach our children, the way in which we interact, like for example, Zoom, everything has changed. The change is dominant, and very importantly, the change is accepted by everyone, irrespective of the age profile. Today, for example, we are discussing through Zoom, and our children are taking education through online classes, and we entertain ourselves probably by watching Netflix instead of going to a PVR, movie theater. So the changes are very, very pragmatic, very, very dramatic, and it is exponential. So in one or other way, what is happening in our economy is that the country is becoming probably one of the largest and importantly, one of the fastest economy in the world in terms of digitalization. Whether it is a consumption, whether it is an enabler, whether it is a beneficiary, it is touching across all the aspects of not only B2C, but also for enterprises. To give you some perspective, the India's internet penetration and our number of subscribers has already touched 720 million plus in just last probably, and this data is also a little bit old, it is not the recent data, but the way in which it is growing is probably 30, 40, 50% compounded for last 2, 3, 4 years. Our mobile data users consumes roughly 13.5 gigabytes compared to China average consumption of probably 6 GB. If you look at the total downloads, Indians have 1.15 billion mobile phone subscription, and they have downloaded more than 30 billion applications in 2020. We have not yet got 21 data, and I'm sure 21 data probably would be crossing more than another 10 billion application would be added. So, cutting long story short, the digitalization is the way forward. The next generation opportunities are coming out of such digitalization. So friends, without wasting much of a time, let me take this opportunity to present what is this our product, what is this new product it is all about, how it can benefit the investors, what kind of growth opportunity we do see from investments in this kind of a companies, and how we believe that it will create a very solid wealth creation opportunities for all the investors who invest in AAA, Fintso, next generation opportunities, small case. So the entire theme of next generation opportunities portfolio, it is a theme-based portfolio investing in India's new age technology companies. And let me explain you what I mean by India's new age technology companies. To give you a snapshot of this portfolio, it is a portfolio of 10 to 15 companies. The portfolio companies which are market leaders. I am underlining this particular two words, the market leaders. Having a strong corporate governance, of course, high growth potential with an investment horizon of 3 to 5 years. It is a pure multi-cap spread across large cap, mid cap, small cap. So we strongly believe that we don't believe in seasonal products. We should be 24/7 product. It should not happen that today large cap is performing and we are mid and small cap, so it doesn't perform, it doesn't work. So we have decided to make it multi-cap. Of course, minimum investment amount is 5 lakh rupees. Coming to investment strategy, it basically identifies companies that are expected to benefit from powerful secular trends. I'm repeating this word. These are really very long-term sustainable trends in the technology sector. It focuses on growth opportunities in this technology transformation theme. And the companies which are going to be participating in this universe, these are the companies that are enablers. They enable, they produce, they develop, or they might be using such a change in technology for their businesses. So it comprises of various subsegments like SaaS, platforms, e-commerce, digital payments, robotics, Internet of Things, and securities. So this is something very important. And probably when I talk through the presentation, I will talk about why the market leadership. That's something very important, a secret sauce to make sure that we not only create wealth, but we also protect capital. Just a little bit about me, Kumar has already covered. So this is Alpha Accurate Advisors. I am founder of this firm. I started this journey in 2009 after spending almost 15 years in Indian capital market in different capacities as an equity research analyst and then fund manager with DSP BlackRock. Our investment motto is protect capital, create wealth. We focus on long-term wealth creation and which is resilient to market ups and downs. We strongly believe that if you invest in companies which are resilient to the economic shocks, you can give the resilient outperformance to our investors. In last 12.5 years, the 1 crore invested in our PMS has become close to 8.27 crores, which is 18.8% compounded returns net of fees to our investors, outperforming the benchmark indices significantly. Why Alpha Accurate Advisors? Something very important is the first important thing is advice that is always in the interest of investors. When you do better, we do better. Very importantly, we do not have any conflict of interest. So we do not have broking firm or wealth management firms. We are focusing only on one business, that is investment management. Discipline exit strategy is something very, very important in our minds. We strongly believe that when I talk about discipline, it is just not talking about stock picking, but it is much beyond that. It is stock picking, right stock selection, right portfolio construction, right risk management, and something very important, right exit strategy. To our minds, what to buy, everybody knows. When to sell, that's where the skill comes into play. We strongly believe that discipline exit strategy is something very important to create the long-term wealth. Of course, we have an award-winning investment team with a combined experience of more than 75 years. And last but not least, transparency is something we believe that that's something very important while catering to the investors' mindset. Investment process, stock identification, followed by analysis and research, followed by portfolio construction, and as I talked about, exit strategy. Maybe we can take it more during Q&A session. Let me first talk about why AAA next generation opportunities. What is that, and why this digitalization theme is something very important. Friends, there are three important things which are happening in the country. The first is internet ubiquity. The increased access to internet, the lowest cost per GB, both of these put together has resulted into significant improvement in internet penetration. As I talked about, that if you look at 2020, the access to internet is roughly about almost now 50%. Please remember, 5 years back, this number was less than 20%. So from 20%, we now move to 50%, and 50% is going to move to 70% in next 3 to 5 years. If we talk about the smartphone users, from almost 35 million smartphone users, we are now probably going to become almost 75 billion smartphone users. And last but not least, if you look about the online service users, that have also gone up significantly, and it is likely to further expand, probably 2x, 3x over next 3 to 4 years. So this ecosystem is very important. When you look at any company, or for that matter, any economy, the enabler, why the exponential growth, is because of the ecosystem, the faster adoption of ecosystem. So lowest cost of mobile phone, data consumption, low cost of the leading to further increasing penetration. These two results into the digital democracy. What I mean by digital democracy? Digital democracy means the traditional barriers are no more barriers. Remember the brokers earlier, 10 years back, there was no Zerodha. And today, the 43% of the total brokerage industry is by discount brokers. Who would have thought 10 years back that discount brokers, the online brokers, would be commanding 43% market share? But life has changed. And this has happened because of the digital democracy. The enabler brand, the growth, the enablers, they were so strong that it was possible for an enterprises to offer the solutions to the customers at a fractional of cost, correct? And that's what basically resulted into such a huge scale in the operations. If you look at the digital advertisement spend, it has become almost now 30% of the total advertisement spend. Just 5-7 years back, it was electronic like TV and newspaper. These two segments are dominant. But today, the most important segment is digital advertisement spend. Almost 1/3 of the total spend is going into that segment. And this segment is growing at 30, 35, 40%. If you look at the e-tail, $36 billion gross merchandise value. And this is growing again by 37% per year. So when I say 37%, it means your money doubles in less than 3 years. If you talk about POS terminals, at a petrol pump, you see POS machine and so on and so forth. It is growing by 4x, 400%. If you talk about online gaming, the market size is roughly about $2.5 billion. And 51% is the growth from last 2 years. And expectation is it will continue to grow more than 50% for next 5 years. If you look at the Indian e-pharmacy, this was not the concept 4 years, 5 years back, but today it has almost touched $1 billion market, and it is growing at 60 to 75% currently, and is expected to continue that growth. So what I'm trying to say is that on one side, you have a strong digital ecosystem that is resulting into the digital democracy. It is across the verticals, whether you talk about pharmacy, whether you talk about logistics, whether you talk about fintech, whether you talk about e-commerce, whether you talk about softwares, whether you talk about SaaS, whether you talk about discount brokerage, across the verticals, digitalization is happening at a very rapid rate, resulting into significant growth potential across the different business models. So if you look at the digital democracy, it is reducing the legacy barrier. So earlier, Hindustan Unilever kind of companies, you require a strong distribution network. But with digital democracy, you may not require that distribution network. You can sell everything through probably e-commerce. Transition to cloud, resulting into better operating efficiency, cost-effective data management, and increased digital data storage, resulting into better digital infrastructure, and that further results into more consumer information. So This entire fly of digital is rotating at a very fast speed, and that further creates new growth opportunities for the investors. As I said, this creates the new business models, whether it is e-commerce, whether it is a digital mobile advertisement, whether it is a mobility business, whether you talk about travel and hospitality. Education is one of the largest sector, which is growing at a significantly faster pace. Fintech or health tech, across the vertical, this is happening. When we look at from equity markets perspective, how to play this next generation opportunities in capital market. Surely, the opportunity set is big, but within that, we have identified few segments which are going to offer much larger pie. They are going to benefit significantly. Size of opportunity is huge, and there are a number of companies which are present into those verticals. So there might be many other verticals, but those verticals may not offer you currently probably the better risk reward, or probably they might be into the unlisted space, and therefore there is no way to play on those themes. E-commerce is one theme which we believe is very, very large. Total $36 billion is probably market size as we speak, and is going to cross $70 to $80 billion over next 3 to 4 to 5 years. Every segment within e-commerce, whether it is FMCG, whether it is consumer durable, whether it is a beauty and skincare, whether it is fashion, they all are growing by 10x, 20x, 30x, 40x. So size is not a problem. It's a huge size, huge opportunity. When you go to the second segment, which is the fintech, there are a number of sub-segments within fintech. For example, payment business, you have a PhonePe, Razorpay, GPay, MobiKwik, PayU, Paytm, many such companies. If you talk about consumer lending, you have a Bank Bazaar, you have a LazyPay, and many more such companies, and so on and so forth, whether it is a broking, whether it is a mutual fund, whether it is insurance. And very shortly, I will tell you that while all these companies are unlisted, how to play such opportunities. And of course, size opportunity is big, is growing probably 5 to 6 times over the next 3 to 5 years. And it is this next gen which is driving the unicorns for India. If you look at last 10 years history, today, of course, every day or every week, one unicorn is created. And all these unicorns are slowly, steadily getting listed in equity market. So one of my investors, he asked me the question that why not we look at the private equity market? And I said, yes, you are right. One can look at private equity market, but in that startup space, in that private equity market, 1 out of 10,000 is successful. All others are failures. But when it comes to public equity market, it means that those companies are already successful to a certain extent. They've already proven their business models, and only after that they are entering into public market. So your strike rate in private equity is probably less than 1%, whereas in public equity that strike rate improves to 20, 30, 40, 50%, depending upon how you select the business model. And that's the beauty of it. So there are so many companies that close down, and of course nobody remembers it. So people remember only successes. But every day when one unicorn gets created, thousands of SMEs, thousands of startups are also getting closed down. Of course, nobody knows about it. So the beauty is, let them have that pain from startup to unicorn, and we come into the place when they've proven themselves, so that we don't burn money, because we don't have ability, or affordability as a retail shareholder to burn money, and that is something very, very important. Before I come to the portfolio, let me come back to this slide. So what we look into the company, how we are going to select which company we should buy and which company we should avoid. So friends, as I said, the opportunity canvas is pretty big. It's a very large canvas. We have identified few verticals, and that verticals are across the sectors. Banking and finance is something very important. Consumer is second important vertical, but it doesn't stop just at banking and finance and consumer and information technology. It goes beyond that. Say, for example, capital goods. There are very good companies in India which are offering robotics, they are offering automation, and they are offering the technologies to make the smart products. So smart grid, for example, And these companies are already listed in India. So people have a, what I would say, thrill that, okay, I would like to invest in private equity and I want to see my money become 100 times, 200 times. But the reality is something different. In reality, the good thing about Indian markets are that there are so many companies which are already listed. They are the traditional companies which people think they are traditional, but actually they are changing themselves rapidly. They have a strong balance sheet. They have a strong market share. They have strong cash flows. And it is that reason they are slowly but surely moving towards from physical to digital to ultimately move to digital. And that's the journey. And in that journey, only the companies with a great management, with a great business model, and of course, with a great balance sheet, they are going to be survive this digital, what I would say, the rapid digitalization happening in the country. So while people think that there is nothing much to play in India, we believe that's the myth. Across the sectors, we have identified many companies which fits into this universe. They are moving aggressively to make themselves digital. They are not only making themselves digital, but they are also now disrupting the disruptors, because most of the startup kind of a companies are platform companies, which are getting very high valuations. They are getting those valuations because they are known as disruptors. But at the same time, the biggest risk to these disruptors, they also might get disrupted. And who can disrupt them? The companies who have a cash flows, the companies who are actual consumers. The new age business models, they are burning money to get the customer. But the traditional company already have the customers. For them, technology is a platform. It is a medium to make product better, suitable, convenient. That's the positioning. And moment they do that, they don't have any cost of acquisition for customer. So they don't have to burn money. And in that way, they are fast, they are adaptive, they are agile, and they are becoming threat to the disruptors. And in that process, there is a huge wealth creation opportunity which these companies are offering while playing the same theme of digitalization. So, of course, the great management is something very important. We seek the companies that are led by competent management, best of the breed within the sector, something very critical. I said that we will buy only the companies which are market leaders. And this is something very important. To buy a company which is number 25th is to burn money. We don't want to burn money. We would like to buy only those companies which have proven themselves and which are top 5 in their sectors. We would like to buy only those companies where technology is a mode, where research and development is a mode, where a process efficiency is a mode. Because the moment you create this as a mode and you have 20, 30, 40, 50% market share, it is very difficult for anyone else to probably disrupt you. And you can, in fact, you can disrupt many other companies with that kind of a size and with that kind of a scale. And last but not least, growth is something very, very important. We would like to buy the companies which can grow aggressively over the next 2 to 3 to 4 to 5 years. Remember one thing, the digital economy currently is roughly 7 to 8% of India's economy. And the digital economy from 8% is going to move to 15 to 20% over the next 4 to 5 years. We are talking about 3 times, 2 times, 3 times, 4 times growth of digital economy. What does it mean? It means there are definitely kind of going to be companies which are also going to grow in this digitization world at that pace. So you have 2 sets of equity market. One, the traditional equity market, which are going to give the growth of GDP. And on the other hand, you have a digital economy, which is growing double or probably significantly more than 2x. Speed of the growth is more than 2x. And therefore, if you invest in those opportunities, the market cap growth will be also equally strong because market is nothing but mirror of earnings growth. Let me give you a few examples of what kind of companies we are talking about. and that may give you some color. So this is our current portfolio, and this is a sectoral breakup. As you can see, we have a banking and finance 22%, consumer 14%, information technology 26%, capital goods 8%, telecom 5%, and software platform about 11% of the portfolio. Of course, we have a number of case studies for each of our portfolio companies and the investment rationale. But let me take you through one of the company, how we see that company over next 2 to 3 to 5 years. The name of the company is Home First Finance. I don't know how many of you know this company. The market cap is roughly about 6,000 crores. Loan book is close to about 5,000 crores. This company started by agile and adaptive management. The founder is Mr. Jaydat Rao, Mr. Jayakumar. I don't know how many of you know him. He's the ex-Bank of Baroda chairman. And Mr. Satwalkar is ex-MD HDFC Life as the chairman. On the sitting role is Mr. Manoj Viswanathan, ex-CT, and Ms. Nutan Gaba as the key management people. So blend of aggression with right risk management. That is something very, very important. Aggression and risk management combination is important when it comes to management. Home First Finance probably is the only company, the bank in India or NBFC in India, which is a technology-driven lender with an end-to-end loan processing services. Its turnaround time is less than 48 hours, which is unheard of in housing finance segment. The centralized and consistent underwriting, mobility solutions for customers and employees and sales channels, that's basically very important for quick and efficient processes and services. Let me take you through one important slide of what we mean by digitalization of the, say for example, in the finance space. And this is the flywheel. So you have a digital marketing, you have mobility, you have a data analytics, and you have a technology infra. So you do the client onboarding through digital. You do API integration with third party, very important. So you don't depend on your own. You use techs of every company. You have data on cloud. You have integrated customer relationship management software. And all these things results into the right-hand side chart. The 76% customers registered on app. These are unheard of in housing finance company. And if you look at the Google rating of their Home First customer app, it's a 4.1 rating on Google. It means app is really very good, seamless app by the company. And if you look at the digital dashboard, how it looks like, so you have 1 minute 59 seconds is the average time spent, and 51% unique user logins, and 76% of services on the third quarter, it raised through application. And of course, last but not least, the 29,000 is average payment per user on the application. So what I'm trying to tell you is that, people wondered that how a bank or a finance company makes itself digital. And this is a tech-enabled digital, probably is the only NBFC in the country with 100% technology using everywhere, from client onboarding to processing to the disbursement to the customer, where customer can see all their offer document, the terms and conditions, everything is on the app of the housing finance company. Let me also share with you one of the largest bank, what they are doing to make itself digital. And I'm sure many of you might be customers of ICICI Bank. And this is the stake what ICICI Bank is doing. So moral of the story is most of these organizations, particularly the banks and institutions which are at forefront of technology, they are collaborating with other providers. So for example, Flipkart, seller lending platform, Amazon, EasySign for contactless disbursement, and so on and so forth. So you do not get bank statement, everything you do not required. Everything basically comes on your application. It is a do it yourself. It is a seamless journey. And that results into, look at this right hand side thing. So your significant reduction in turnaround time from 4 days to 3 hours. From 4 days to 3 hours. So that results into significant improvement in productivity and of course, a better access to the customer, and so on and so forth. Same is for Axis Bank. And as Axis Bank says, it is a silent revolution. Today, 1,000 people are dedicated to digital agenda of the bank, and 250 members strong in-house technology team. The bank already has 250 strong in-house technology team. And this results into all these numbers. 5 million non-Axis Bank customers on the mobile app, and 23% contribution of KTV channels, and 55% PL distributed through digital banking, and so on and so forth. I mean, we have so many different parameters on which one can keep checking how the company is doing. And this is not true only for the banks. This is equally true for example, company like in capital goods. Say, for example, ABB. And let me share with you this ABB case study. I don't know how many of you are aware, but recently ABB has implemented the largest conveyor belt in the entire world for a steel company in Karnataka through using their automated processing solution. And same is true for number of such case study, whether it is, for example, indoor smart city entirely managed by ABB. And that is through their robotics, that is through their software solution. It is a SCADA solution, which is a digitally enabled SCADA solution. Through that, they use that to make sure that entire indoor smart city works on that platform, and so on and so forth. So what I'm trying to say is that there are a number of such opportunities across the different segments, and all these companies which I'm talking about, they are not small companies. They are large companies. They are market leaders. Probably they are number one companies in their field. They have a technology as the moat. They have a research and development as the moat. They are agile. They are adaptive. They are not sleeping companies. They have a moat from last 20, 30, 40 years. And they are geared up completely, not only to take the challenges, but actually to take away more and more market share from the weaker players. And that's basically the theme which is happening in India, the consolidation in the entire sector, because the top 3-4 companies in every sector, they have cash flows to reinvest into their business. And since they have cash flows to reinvest, they can invest in R&D, they can invest in technology, they can invest in manpower, and they can create a further moat and improve their market share going forward. This is how the performance looks like. This small case has already delivered 45% returns compared to BSE final returns of 22% from 31st December 2020 to 28th February 2022, outperforming the benchmark significantly. I already talked about, I already introduced, Kumar has already introduced me, and Govind is, director, again, 27 years of experience. Prior to Alpha Accurate Advisors, he was with UBS and Reliance Mutual Fund. And then we have Amal Moria, who is heading our investment advisory as a fund manager. Again, 15 plus years of experience. And prior to Alpha Accurate Advisors, he was a senior research analyst at various firms like MK Global, India Nivesh, and BOE Research kind of thing. So, with that, I would like to thank again everyone for your valuable time. And probably we can open it for Q&A, and happy to answer any of your questions. Thank you.
Yeah. Participants, please feel free to write your questions. We'll answer them one by one.
Yeah, Kumar, can we get the opportunity if they want to raise their hand and they can ask questions?
Sure. So people, you can raise your hands and we'll unmute you. Okay, we have one participant. Yes, Mr. Avinash. You can unmute yourself.
Thank you. I have two questions. First, if I want to see your past performance, 1 month, 3 months, 1 year, 5 years, how can I check this today and even after opting this kind of equity basket? So please suggest.
So as far as this particular product is the model profile is already visible on your screen, as you can see here. And of course, I don't know if you are aware, used to small case, but if you look at small case, you get all different time period performance. 1 year, 2 year, 3 year, 5 years. Everything is available. Small case is very, very digital. As I said, next generation opportunities, and small case is doing that in the investment advisory platform. So it's very, very user friendly, onboarding is very easy, reporting is very easy, tracking performance is very easy. And of course, whenever portfolio gets rebalanced, you get automated email that you need to act because there is a rebalance. So everything is available on small case platform. You can you can always
Avinash, to answer you also it is all this data is available on the partner web and the app. So on the Fintso on the Fintso app and the partner web itself, you'll get all collated information along with the client's other investments as well. So that would be like readily available to you.
Okay, and
Avinash, apart from that, if you need any past performance of related to a product which is handled by Mr. Rajesh Kothari, so you can write to your RM. We will collect all this information for other products where he is managing other product portfolio. We will share those performance also. So this particular product is exclusive for Fintso subscribers. It's a new one, so that's why we can't show past performance. But yeah, Mr. Kothari's performance you can see whatever product he is handling right.
okay. So another point is if I have some query or I want to know something about this portfolio, how can I connect with you or your team?
So Avinash, you can write us, you'll have a dedicated service manager. You can write the question to them and they will redirect the question to the dedicated person and you'll get your answer.
I'm sorry, but always Fintso is trying to come between us and the fund managers.
So the
we
reason
do not
behind,
get the answer on time. So if
the,
you provide us some communication link between us and the fund manager, it will be good for us.
so the reason why we are doing that is so that we can filter out information. If we have already raised a question with the fund manager, we have the responses ready and we can immediately reply to that. The idea of this whole setup is to scale the business. Like if you think about it, we get so many queries about the fees, about the the basic modus operandi of the entire small case or equity basket which we have. Now, just these are very basic questions which we don't think we should take the bandwidth of the fund manager, which we try to address at our end itself.
Okay.
Yeah, Nilesh, you have some questions. You raised your hand.
Yeah. Am I audible?
Yes, you're clear. Loud and clear.
So, and yeah, hi Kumar. So, sir, as you mentioned, like this portfolio is having stocks which are the you can say companies in the public market, and they are not changing immediately, but slowly and steadily, right?
No. It is a combination of number of companies. We do not believe and do not buy the companies which are changing slowly. We don't have time. The world is moving very fast. We need to focus only on those companies who are moving fast. So say, for example, ABB, correct?
Okay.
ABB is right now number one in India in implementing robotics.
Okay.
ABB is right now number one in India in implementing smart grid for Indore city, for example, correct? And companies like that. For example, Home First Finance is only technology backed funding, lending. They don't use anything else, correct?
Okay. Yeah.
We do not believe in buying companies which are slow. The world is not slow. The world is moving fast. And only those companies who have capability, mindset, dedication, and execution on ground, only those companies will survive in our view, correct?
Okay.
So say, for example, India's largest bank, and everybody knows the bank, correct? Most respected bank. Compared to that, ICICI Bank has moved much faster in terms of digital, whether it is credit card, whether it is a on mobile, ease of customer, whether it is a B2B solution, whether it is a types with a number of, collaborative with the technology partners, and they gain market share. And the other large bank, they didn't probably act timely 4 years back, 3 years back, and they lost market share in the interim. Correct? So we are going to buy only those companies which are faster in adaptability of digital and they are basically disrupting the other players. Correct? So for example, one of our company is into what I would say IT space, and that company has a 55% market share in digital offerings. 55% market share. I don't want to name that company. Everybody, you and me, probably both are using that product. Very, very nimble company, 55% market share, and believe me, debt-free company, 30% return on capital employed. So when people talk about digital, all of a sudden they think company must be loss making. कंपनी ने 200-500 करोड़ रुपया अभी तक तो लॉस कर दिया रहेगा, बैलेंस शीट एकदम फटी हुई रहेगी, and then they must be doing QIP or something, private equity. We avoid such companies. We don't want such companies. We want to focus on those companies who are at the forefront of technology with a strong market share and strong balance sheet and strong return on net worth. Correct? Because it is very easy to lose money, correct, by investing into the assumptions that today you have 1 million subscriber, tomorrow it will become 2 million. By using my money, they'll make it 1 million to 2 million. Anybody can do that. Correct? Even you and I can do it. If we get, if you get $2 billion funding, probably even you can do it.
Yeah.
But that's not a fund. The important is how you make it 2 million subscribers profitable. And that's the name of the game. So we are very, very focused. We buy only the market leaders. Market leaders with a proven track record, with a strong balance sheet, strong management, strong corporate governance, and they are moving very fast digitally to make the inroads into whosoever, India, local, China, from the competitive landscape. That's what our thesis is all about.
Yeah. So the next question is, so how you position this portfolio, the aggressive portfolio or as a prudent portfolio? And second question is, how frequently will be the rebalancing of these stocks?
Good question. The answer to the first question is, from the volatility perspective, since it is a thematic portfolio, we think the volatility is going to remain high. Within, of course, to mitigate the risk, as I said, we have already diversified across multiple sectors to reduce the risk to the extent possible. There are a number of ways in which we have reduced the risk. So while the volatility, we are keeping it as a high number, we believe the risk inherently we are trying to reduce by number one, diversification across market cap, large cap, mid cap, small cap. Number two, diversification across sectors. And number three, very importantly, buying the businesses which are number one companies in their field. That is something very, very important. And many of these companies, because they are number one, the stock price volatility is much lesser. They don't go down 20% up and 20% down in a day. Correct? So they are very, very resilient. They are resilient to economic shocks. And that is something very important to preserve the capital of the investors. Okay. So from level perspective, we are keeping volatility as a high, as a barometer, but within that, we are reducing the risk as much as possible. To answer your second question, is very, very important question. And I think that's something secret sauce of Alpha Accurate Advisors. We believe that buying just right stocks doesn't mean that work is over. We have to get out of it at the right time as well. If we do not exit, all profits are only on paper. So we have a very strong disciplined exit strategy. We have not any fixed rebalance frequency that we will do at the end of every month. We will do it whenever required. If it is tomorrow requirement, we'll do it tomorrow. Correct? So we have not set any set frequency. We are very, very active manager. We will rebalance as soon as we believe if the growth assumption is going wrong, or the valuations are already very high, or our target price is achieved, or there is a better risk reward. And last but not least, or if we go wrong, and we do go wrong. And when we believe that we are going wrong, it is better to get out of it, because the world is changing. As I'm saying, there are a number of variables, they keep moving completely in different directions compared to what one could have assumed. And if you think that it is not working, maybe due to external or internal factors, it's better to switch to a better positioning with a company with a better risk reward. And then we do rebalance.
Thank you so much, sir.
Just to add one more point, on the small case, on the platform, it has been defined as a monthly rebalancing. But monthly rebalancing does not mean that the fund manager will choose to rebalance every month. It is just a feature which is provided. It is a monthly rebalance, could be a no rebalance as well. Okay. We have another question which says, as COVID restrictions are revoking, one will visit restaurants or visit PVR rather than using Zomato or Netflix. How will IT lead this change going forward?
You are absolutely right. I think the consumer behavior is going to be completely different, probably pre-COVID and post-COVID, very likely. So we need to be very prudent about what we are doing, and therefore don't buy the businesses which are just dependent on one seasonal behavior. So we don't buy them. Very simple, correct? If you believe that this trend is going to continue, if you believe that this trend is going to be secular, and importantly, if you believe that you are going to make money out of it, I'm talking at a company level, they are going to make it profitable at some point of time. And if you are getting at a reasonable valuation, then you buy that. Otherwise, don't buy it. So we have avoided 99% of IPOs in last 9-12 months. We have not subscribed to Paytm. We have not bought into PB Fintech and many more such names. So we are restraining ourselves. We don't want to get carried away because everybody wants to be into that new age world. It is like .com bubble. And you know how many companies finally survived after 1999? Not many, correct? So we need to be very, very prudent. As I said, for example, we like one of the company which got listed recently, and they are into software services, very niche company, 55% market share, profitable company, zero debt, 30% return on net worth, 30% return on capital employed, and can probably grow at 30 to 40% compounding for next 3 to 5 years. That can be an interesting company. It has nothing to do with consumer behavior. It has more to do with the consumer aspiration, because everybody wants to use it on everyday basis. Correct? So we need to really be smart enough. Don't get carried away that we need to buy the new business for sake of it. Avoid such things. Avoid the temptation and avoid the greed. That's the only way to make sustainable, risk-adjusted, superior returns in the long term.
Thank you for that. We have another subscriber, Mr. Ashish Shah. You can go ahead with your query.
Yeah, I just wanted to understand two things. What will be the ideal time horizon the investor should, come into the portfolio? And second question is, if you could, throw some light on what would be the average profitability, of the companies in the portfolio in terms of EPS numbers or something, if readily available. Thank you.
Okay. First, in my view, having seen 27 years into the market, and at a team level 75 years into the market, have seen probably 4 business cycles from 1994 to 2022. I strongly believe that anything less than 5 years is not a good number. 5 years investment horizon is very important for any investors. People do say 3 to 5. 3 is minimum, if you ask me. Ideally 5 years. In fact, yesterday I was talking with one of the largest wealth manager, and he was telling me that while all products, generally speaking, all good products in India has delivered 12, 14, 15, 18% compounded returns in last 10 years, investors have not made it because their average age of investor in any product, particularly mutual fund he was talking about, is less than 2.5 years. So only way to actually make money is to make sure that your investment horizon should be minimum 3 years, ideally 5 years. That's number one. To answer your second question, the EPS of the portfolio, every company, of course, would have different EPS numbers. So there is no one answer that what is portfolio EPS. There is nothing called portfolio EPS. Every company would have different EPS and different price to book and price to earning number. Many of our portfolio companies, they are largest companies in India. And therefore, what I would say, ROE is a better number to check for. Leverage is a better number to check for. The profit size is a better number to check for. So profit size are very, very large because they are market leaders. Debt equity is almost zero for 95% of the portfolio. They are debt free. And return on net worth is significantly superior, significantly higher than their cost of capital. On price to earning multiple, every company is a different price to earning multiple, and it would be not right if I give you average P because it won't serve the purpose. But there are companies which are trading at 20 times, and there are companies which are trading at 30, 40, 50 times. But one thing is important, the character of these companies, these companies are growing at a significantly faster rate than the underlying economy or their underlying sector. I hope I gave as much as possible from my side to satisfy your query.
We have another question by Mr. Vivek. Can you go ahead?
Yeah, hi. So if one was to look at the construct of the portfolio, right? So about 30 odd percent would be technology, and then it's widespread across finance, industrial. So if you were to look at this portfolio, how would you place it, say, vis-a-vis a mutual fund portfolio? Which category of schemes would you place it against? Or
Well, I don't think there is any right comparison to this product, because I don't think there is any other product with a similar nature, at least in my knowledge, in mutual fund industry.
We have another question which says, like, she's asking for expense ratio and the commission. So the expense ratio for this fund is 2.5% charged on a monthly basis. Okay. And the commission
2.5% per annum.
per
Just to
annum.
clarify, 2.5% per annum charged on monthly basis. Yeah, Kumar, please go ahead.
Yeah.
so,
The commission details will be shared separately with all subscribers.
just a continuation of my last question. As you, if I was to tell a client, right, where I'm going to place this portfolio in his overall portfolio as a exposure to. So I would put it across, say, a multi-cap exposure that I given him, a long-term core portfolio exposure that I'm going to give him.
Yeah,
Is that the right way?
Multi-cap. This is going to be a multi-cap portfolio, undoubtedly to be multi-cap portfolio. It basically becomes a thematic portfolio. But unlike many other themes which are seasonal in nature, say for example, 5 years back, pharma was a theme, then it died down. In between, infrastructure was a theme, then it died down, and so on and so forth. Whereas this theme, this portfolio theme, is going to be secular for at least next 10 years. Because the theme is next generation opportunities. And the digitalization is only going to accelerate over next 5 to 10 years. After 10 years, something may change, who knows? But at least for next 5 to 10 years, this is going to be a secular trend, not only secular, high growth trend for 5 to 10 years. Because we are just actually at the beginning of the digitalization. It is not an end to digitalization, correct? So if you look at, for example, credit card penetration is just 3%. If you take, for example, the total consumer buying through e-commerce out of the total retail market is less than 2%. Correct? And 2 will move to 4, and 4 will move to 8. And probably we'll end at somewhere maybe at 18-20%, the global averages. And that is a long journey, probably is a 10 years journey. So it should be part of the core portfolio. It is a multi-cap portfolio, and it is a high growth portfolio.
Thanks.
Yeah, we just have one more question right now. What is the view on Dixon Technologies from a long-term perspective?
Very important question, and let me take this opportunity to further tell you how basically we select the stocks. So what we do internally is that we have a 3M investment approach: market size, market share, and margin of safety. Market size is size of opportunity. Market share, we buy the companies which are leaders. We do not buy challengers. And margin of safety is valuation. Now let's put Dixon in this 3M investment approach. Size of opportunity, clearly it is a huge opportunity, because India till now was only importing most of the components, and now India has decided for a Make in India. PLI schemes are getting launched, and Dixon, being the largest contract manufacturer in the country, is the biggest beneficiary of this China Plus One thesis, and also the Make in India thesis, and also the PLI scheme. I don't know how many of you are aware, but Dixon is the largest manufacturer of washing machines in India. Most of the brands in India, multinational brands I'm talking about, they all buy product washing machine manufactured by Dixon. And same is true for LEDs, same is true for room air condition, same is true for televisions, and many more such products. So Dixon is the largest contract manufacturer for all the brands, domestic or multinational, in India. With PLI scheme coming in across the different products, Dixon revenue for the last year was roughly about 5,500 crores. We believe the Dixon revenue become 5 times in 5 years to cross 25,000 crores by FY25 or FY26. So not even 5 years, because March 22 is already over. So you were 23, 24, 25, and 26 in 4 years. We expect the revenue to cross 25,000 crores. The company, which is a market leader in contract manufacturing for few companies, will become now market leader for mobile manufacturing for Motorola, for Nokia, and for Samsung. Not only for India, but probably for the Samsung world markets for different models of phones, because Samsung is a number of phones, feature phones, smartphones, and so on and so forth. The economies of scale will help Dixon to further leverage on their cost competitiveness and will further improve their margins as they move forward. Dixon is a debt-free balance sheet with a 30% return on capital employed. And we believe the new opportunities will keep create Dixon sustainable long-term growth for another month, at least 2 to 3 years after FY25, FY26, because by the time many more new products like laptop, tablets, the mobile related products, they already made the tabs with the Bharti Airtel. They made one more tab with the Japanese company for the new range of products, and so on and so forth. So we are fairly positive on the Dixon Electronics. Having said that, of course, we keep watching the valuations on regular basis. And if at any point of time we believe that growth is going to slow down or the valuations are not in our favor, we are not averse to exit. So currently we are positive. Did I answer your question?
That was a question raised through the Q&A section.
Okay,
So,
perfect.
so there's another question which says, why someone should add your portfolio who already have a mutual fund exposure? Like, why investors should choose this product where there's nothing new in it? In India, there are few companies to buy where mutual fund is done very good. So what is the reason to buy this product?
3 important reasons why you should buy this product. As I said, there are 2 types of economy right now. One is the traditional economy and one is the digital economy. The traditional economy is growing at 11% GDP, 6% real GDP, 5 to 6% inflation. You get 11% normal GDP. And the digital economy is growing at 18, 20, 25, 30%. From 7%, it is going to become 15 to 18% of the economy. It means we are talking about a more than double in next 4 years. So we are talking about more than 20% compounding. That's the speed of digital economy. The traditional economy, which is growing at 11%, good fund managers, good product, any good product, can probably give you maybe 100, 200, 300 bips better, because that's what the growth of economy, you create some alpha. In the digital economy also, good fund manager can make it 100, 200, 300 bips better. So probably the returns are much better compared to the traditional economy. And as I say, probably, at least in my knowledge, I have not seen any mutual fund offering digitalization theme in their any of the product. And therefore, our product has a much superior underlying earnings growth, number 1. Number 2, very superior underlying business quality. And number 3, last but not least, is a disciplined exit strategy. That's the single most important USP. Not only mutual fund, any product of Alpha Accurate Advisors, whether it is a PMS or advisory or any product, we believe exit is as critical as entry. And at times, that might be missing for mutual fund. Lastly, let me also tell you, the biggest difference between any product and Alpha Accurate Advisor is that while all fund managers are competent and they are professional, they do change their jobs. And in fund management, it's like a restaurant business. If the chef changes, everything changes. At Alpha Accurate Advisors, I am a founder and I'm not going to change my job. So there is no risk of changing guard. And I would say that is the biggest reason why one should invest in Alpha Accurate Advisors, any product, whether it's PMS or RIE.
So there's one more question, which is actually not related to the product, which says, what is the view on Adani stock?
we do not have any view on Adani stocks.
Okay. So I have just unmuted and allowed Ashish Shah. So yes, you may go ahead.
Sir, just to understand in terms of, what returns the investors can expect, there are a few mutual funds like, Aditya Birla Digital India Fund and some other technology focused funds, which over 3 years have delivered average more than 30% CAGR, over 10 years, more than 20% CAGR. So are we like, projecting to beat such kind of returns through this fund is what I want to understand.
First of all, there might be many products which are technology funds. And those are typically the funds which might be investing only into the technology sector, traditional information technology sector, like Infosys and Wipro, TCS. And of course, all these companies have done extremely well. In last 2.5, 3 years, most of these companies have doubled. And therefore, you have seen those kind of return. But those products are not probably comparable to my product. Okay. Technology fund is different, and next generation opportunity digitalization product is different. I hope you are getting the difference between these two. Digitalization is different and technology funds are different. So there are many technology funds, but those are investing only into the IT services providers, most of them, 99% of them. Okay. So that's a big difference between our product and other products, number one. Number two, when it comes to the returns expectations, as I said, we believe that digital economy is growing much faster than the traditional economy. And therefore, the companies which are operating into the digital space, their profit growth is also faster than the traditional economy growth. And market in the long term is nothing but mirror of earnings growth. So if the earnings growth is strong and superior, naturally, the market returns will be also strong and superior. We cannot guarantee probably what kind of returns, and it would not be right for me. But I'm sure since you are a distributor, probably with a good experience, you know that if the companies are good with a strong growth, the returns also, normally speaking, in the normal market conditions, they are reasonably superior in the longer term. I've already also shared my current portfolio, and you know the kind of returns what I probably shown on that one of the slide.
So basically, Rajesh, what I understand this benefit for subscribers also. This product is not sector-based product. This is an open market product, and theme is digitalization. So if we are comparing this product with the technology or sector-based product, this is not the right thing. So this is a basis for everybody. This is not a sector fund. Don't go and check this like a technology fund. This is not a technology fund. So this is a big differentiator, and this is a unique thing also. One product is identifying one particular script, or maybe you can say company. Those are totally dependent on their growth. They adopted their growth based on the digitalization. So if two companies are running, or one particular company already adopted digitalization, so their growth rate would be more than whatever traditional companies do. So rightly, Rajesh also given some example of companies, those already adopted digitalization, so their growth is faster than any traditional company. Those are in this same business. So just compare this particular portfolio on that. Second, this portfolio, if you how we are pitching to our clients. So this is a boutique house. This boutique house, like Rajesh, for me is a boutique house, boutique fund house. It's not available for everybody. It's available only for HNI or super HNI clients. So with our request as a Fintso, we want to give this particular decent portfolio to our subscriber, that they can bring this particular portfolio to their retail investor also. So that's why ticket size come down from 50 lakh to 5 lakh. So now you can approach your client. Those are already, I think they are dealing with maybe some wealth management company or banks or some other PMS houses. They can buy, they can participate in new concepts also with a lower ticket size. So this is a big thing, because as someone, some Mr. Avinash asked, can I reach Mr. Kothari for whenever there is any question or any doubt? if this particular platform would not be available to you, you can't reach Mr. Kothari because he's available only with a selecting investor. Those are investing maybe in crores. So this is a unique thing. So we have to go and we have to pitch to our clients that this particular fund manager is not available for everybody. This is exclusive one. So that's why they can invest through you. So there is no comparison. So please keep this in mind. This is exclusive for Fintso subscribers. So they can pitch their product to their clients. I don't want to mention any revenue here because if you're comparing with the revenue side, so you're also earning, I think 50% more whatever you are earning in mutual funds.
And lastly, since you raised that topic of mutual fund performance, our existing PMS, which is flagship product of Alpha Acclaimed Advisors India Opportunity PMS Plan, has delivered in last 12 years, one of the few PMS with a vintage of 12 years, 19% compounding returns, and received the award for the top PMS in the country consistently for last 3 years. Probably it would have outperformed most of the mutual funds. I have full respect to mutual funds, but when you look at the comparison, probably it has outperformed most of the mutual funds. I'm talking about a regular India Opportunity PMS plan, a 19% compounding, 12 years.
So right now we don't have any more questions. Neither anyone has raised hands. I think we can end.
So thank you very much, Rajesh. Thank you very much for spending your time and address the entire Fintso subscribers. And we are looking forward to our subscriber as well as your performance. So we can go ahead more product with you, with your expertise. Thank you from my end, Kumar.
That's it. Like I was just going to greet him and thank you everyone for joining us today. You can always write us to any questions and we'll definitely answer them. And we'll connect with the fund manager to answer your queries as soon as possible. Thank you, Kumar. Thank you, Rajan. Thanks very much for giving us an opportunity. And thank you, everyone, for your valuable time. Please feel free to send any queries to Fintso, and we'll be happy to answer at the earliest. Yeah. Thank you, friends. Wish you all the best.